Bristol Myers Squibb stock, ticker symbol BMI. This stock is down almost 22% year to date, massively underperforming the S&P 500, which returned nearly 12% year to date. And Bristol Myers Squibb reported a beat on EPS and revenue, most recently. And for the upcoming earnings, almost all analysts expect a miss. People love BMY stock for different reasons, and one of them is the dividend. And I understand why, with dividend yield at almost 6% and 7 years of dividend increases. If we take a look at the total returns in the past 5 years, we see that Bristol Myers Squibb stock massively underperforms the S&P 500. But could this be the perfect time to buy BMY stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does BMI do? Bristol Myers Squibb discovers, develops and markets drugs for various therapeutics areas. A key focus for Bristol is immuno-oncology, where the firm is a leader in drug development. When diving into the earnings, we see that revenue increased 5% year over year. The growth portfolio increased 8% year over year, and the legacy portfolio increased 2% year over year, both looking fine in my opinion. A very important note in these earnings was the net loss in the first quarter. Main reason was higher interesting expense resulting from new debt issuance to fund recent acquisitions. And that's because the company is changing a little bit here. With these recent acquisitions, they tried to boost their growth again, which was a smart move in my opinion. They're also trying to save internal costs of 1.5 billion by the end of 2025. Looking at the 2024 full year outlook, we see that they expect revenue to grow at low single digits and EPS to be in a range of $0.4 to $0.7 per share, again including the impact of the recent acquisitions. In here we see that revenue is increasing year over year as mentioned before. However, the gross margin is decreasing a bit, so that's something to keep your eye on. Another interesting thing is that as of right now, BMI has around 10 billion in cash and 55 billion in total debt. They are planning to pay down around 10 billion of debt in the coming 2 years. On top of that, they are focusing on increasing their dividend as well and do a 5 billion repurchase program. All of this looks really good to me. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Bristol Myers Squibb is a 83 billion market cap company. PE ratio isn't shown because of the most recent report net loss. However, if things go according to plan, the PE ratio will be back again in the upcoming quarter. Later in this video I will show you my 3 price targets for BMI stock, so make sure to watch until the end. Revenue is at 45.5 billion and in this graph we see that revenue went up in the long run. Not always at a steady and consistent pace. Also, most recently, revenue is finally increasing again after a period of decreases. Gross margin and operating margin are coming down in the recent years. The most recent decrease to a negative number is because of the acquisitions we talked about before, so nothing that worries me a lot here. For the EPS, it is pretty much the same story, nothing really special to add here. Analysts expect that EPS will recover back to $7 in 2025. After that, they expect EPS to decrease again, which is quite interesting. For the revenue, analysts expect around 3% growth in 2024. However, in the year after 2024, it is expected to see a revenue decrease. Again, very interesting. Return on assets is sitting at minus 6.5%, which is a really bad number. Return on equity doesn't look good either. But the most important number, return on invested capital, is sitting at 10%, which is a great number. It is also higher versus the 5-year average, which is a good thing. Current ratio is at 1.1, which is a great number. To me, this looks pretty good. And right now, BMI has 57 billion in debt. I prefer companies that can pay down at least a big chunk of the total debt with the total cash. BMI has almost 10 billion in total cash, so they can't pay down a big chunk of their debt. In the earnings presentation, we saw that they are planning to pay down at least 10 billion in debt in the coming 2 years, which is the silver lining here. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends, and all other things. And here we see that free cash flow is going up in the long run. In 2020 we see a big increase due to COVID vaccines of course. Other than that, it is looking really steady and consistent. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 5.8%, which is a great number. Annual payout is at $2.4 and payout ratio is at 200%. But this number is a bit diluting here, since the reported EPS in the recent quarter was impacted by the acquisitions and debt. The 5-year growth rate is at almost 8%, which is a great number. Also considering their yield and payout ratio. They increased the dividends for 7 years in a row, which is also nice. If you take a look at these numbers, the dividends paid since 2012, we see that BMI did increase the dividends at a decent pace, especially during the lockdown periods. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio is going up big time. As mentioned multiple times now, this is because the most recent reported number in the earnings after the acquisitions. I expect it to come down to the historical 30% again in the upcoming quarters. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation that can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous years. And overall these dividends look really good to me. But how about the historical returns? I decided to compare BMY stock with the overall market. In this case, the S&P 500. Next to that I added Merck & Co and AbbVie. On the 5-year chart we see that BMI had by far the lowest return at only 4%. And keep in mind this is including dividends. The S&P 500 is sitting at 103%. And AbbVie managed to beat the S&P 500 with 146% return in total. On the 1-year chart things look pretty interesting, with BMI sitting at minus 34%, while the S&P 500 had the highest return with nearly 31%. On the 6-month chart it is again BMI sitting at a negative number, minus 50% in total, while Merck & Co is having the highest return here with nearly 29%. On the 1-month chart it is still BMI that is having a negative return here. This time the S&P 500 is the winner. Bottom line, BMI was beaten by the S&P 500 and competitors in both the short run and the long run. So could this be the perfect time to buy BMI stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 4, 6 and 8%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 4, 5 and 6%. For the free cash flow margin, I'm putting in 25, 26 and 27%. For the PE ratio and the price to free cash flow, I'm putting in 6, 7 and 8. While the desired annual return is 12.5% since I get an easy 10% average annual return with owning an ETF. Right now, BMY stock is around $41. I hit analyze and we see a lot of interesting numbers. Since the company is facing some issues with the recent earnings, I'm not focusing on the multiple earnings of value here, since I expect this number to recover in the upcoming quarters. We have a low price target of $50, we have a mid price target of $62, and we have a high price target of $77. To me, the low to mid price target is the most justified here, meaning the stock is undervalued based on these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Bristol Myers Squibb is that it is an interesting company. Most fundamentals look pretty good, and the fact that they are focusing on growth and paying down debt comforts me a lot. I think there was an overreaction on the earnings and people misunderstood them. Things like payout ratio and EPS might scare people away, which is in my opinion a bit diluting. It also means that there were a lot of buying opportunities. The dividend yield itself looks pretty interesting. It is high, it is growing, and also a decent payout ratio historically. From a value point of view, things also look pretty interesting. I do think the stock is undervalued, and I put them on my buy list. I'm currently not owning this stock, and I do want to expand my health sector. The question is if BMY stock is the best stock at these prices. So I'm also going to check some other healthcare companies. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and it did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.